Saylor is behaving like a commodities trader. He's trying to squeeze something. This is a classic squeezy type play.
But what this is also telling you is that there's just broad acceptance of Bitcoin now, and that I think this probably accelerates.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show.
Jonah, welcome back, everybody, to another 1000X podcast. We're happy to be talking today because Bitcoin is at $95,000 per Bitcoin. Pretty nice change of pace from the last time we recorded when Bitcoin was at $85,000 per Bitcoin. I think if you recall, last time we were talking about this is looking really good, and it's probably time to buy some out of the money calls, because I think Bitcoin can move very fast in this particular environment. The environment, just to jog everyone's memory, is the fact that Bitcoin was radically outperforming the equity markets, like to the point where we were kind of shocked that normally when equity markets are down, Bitcoin is down more, and Bitcoin is actually going up. And it's kind of, it's, you shouldn't fade that signal. And, it turned out that was a strong signal. And now we're up more than 10%, in a week. And I don't know, things are looking pretty good. What are you thinking, Jonah?
Yeah, I'm definitely feeling good about this. Bitcoin, it's outperforming stocks in a way that looks consistent now. It doesn't look like it's just going to mean revert back down. Our favorite ratio is basically on the highs. I'm feeling good. I think this market keeps pushing higher, but I don't know if it just gas is higher. I don't think it's going to rip people's faces off. I think it might just be more of a general kind of outperformance type scenario where it trades with a bit of beta to stocks, but the ratio keeps grinding higher over time. I think Bitcoin will gain ground on sell-offs as people look for portfolio diversification. On rallies, if it's like a big macro, tariff news driven rally, I think it may just perform in line and then maybe gap higher as people look for beta. But I don't think people will look for beta at the beginning of a tariff driven relief rally. I mean, the thing is, though, we've had some crazy inflows. You just referenced those. Last week alone, it was $3 billion worth of ETF inflows alone, not to mention spot. If you follow the onchain stuff or even just Twitter accounts that follow onchain stuff, Bitcoin's getting withdrawn from exchanges. Whales are buying. All of these are sort of bullish fundamentals. Yesterday alone, $600 million worth of the ETF were bought. IBIT was basically $1 billion of inflows, and then there were some random outflows from ARK and GBTC. Who knows? But net, it was $600 million worth of inflows. This is massive. I mean, some of it, and this is something that we should probably talk about. When you see ETF inflows, some of it could be to arbitrage CME basis or other forms of futures basis, because during rallies, perps and CME futures and just derivatives of all kinds trade above spot. So people buy the ETF and short the futures in sort of like a riskless basis trade to earn some yield. So I have to quickly double check how much CME basis open interest went up. But I think a lot of this inflow in ETF space looks like it is just outright buying, which could be sticky. What do you think?
I think a reasonable amount of it is outright buying, and you can sort of just estimate this, like you said, by looking at the CME futures, but also just as like a gut check. It's very rare that you get a tremendous amount of inflows for trading basis when basis is low, and basis is low when Bitcoin sells off. And all of those flows were coming basically as Bitcoin was going back up, and they started before, right? Basis was at 5% throughout when these inflows were coming, and that's not really indicative of people are coming in because they're trying to take advantage of this basis trade.
Yeah, no, that's fair. So it does seem
So with that said, basically from April 21st to April 28th, the CME open interest went up about 1 billion. So even if we take the top end of that estimate, it's like, okay, every single dollar that was put into the CME in increase of open interest was for basis, that would still be $2 billion of flows.
Yeah, exactly. And I'm looking on Velo Data. Our friends at Velo Data have a nice dashboard for this. If you want to look, I was just double checking on chain OI, or sorry, crypto native OI, I should say. Binance plus Bybit plus OKX plus Deribit plus Hyperliquid. Over the last week, BTC OI is basically unchanged. It went from 8.2 billion a week ago. Oh, sorry, that's just Binance. 18.5 billion a week ago to 17.9 billion as of the last data point. So it's actually like down a little bit. So that's that. I think these ETF inflows are real, like you said. I don't think it's just arbitrageurs.
100% agree. These are real, and I think it's a combination of the flows that we were talking about on the previous podcast. One, people allocating to Bitcoin because this is a good general market environment for Bitcoin to prove itself as like the macro asset safe haven hedge. Like as the world is fracturing, as tariffs are coming in, and the U.S. is pulling itself into its own little economic bubble and trying to isolate China, having a cross-border asset becomes even more valuable. Having an asset that isn't let's put it like this. Basically, no matter what asset you hold right now, the rules of the game are much more likely to change than they were a year ago, right?
Yes.
The rules of the economic game in China or the US or the EU, people are going to have, Trump is making decisions on the fly and other countries are going to have to respond to them. You have no idea what's coming. It's kind of nice to own an asset that exists outside the confines of a state. That's pretty, you know what the rules of Bitcoin are. They're not going to change on you. Nobody's inflating away Bitcoin anytime soon. Nobody's playing, currency manipulation games to devalue it because they need, exports. None of this stuff is happening, right? It's a simple, clean asset, like gold, and that's why gold did very well. And so I think a lot of, like, over the last week, that there's billions of $3 billion that have come in. I think a non-trivial portion of that is people reallocating for the thesis. The second point is all of these new MSTR competitors that are coming online. Just for listeners that still don't quite understand the MSTR game, basically the game is that Saylor can make an infinite amount of money for himself because there's demand to buy non-recourse leverage on Bitcoin. Right? Leverage.
Well, why don't you explain that a little bit more?
You can't get liquidated.
Yeah.
So basically, what Saylor gets to do is he gets to go out there in the market and say, our stock's trading at a premium because people are willing to pay a premium for this, because when Bitcoin goes up $1, our stock goes up $1.2, and people kind of like that idea of this beta, so they're willing to pay a little bit more to get access to our stock. So I'm going to actually sell this stock for cash that I'm going to use to accumulate more Bitcoin, and it's this flywheel. And he gets to sell the stock, and he doesn't take all of every single dollar and use it to buy Bitcoin. He actually has to use some of that cash for operating expenses and paying people and all sorts of stuff. So he actually ends up as well making money on this. And I think what the rest of the world realized is, wait a second, why should we leave this financial engineering game solely to Saylor? Like, why can't we do this too? There's nothing special about what he's doing other than the fact that the MicroStrategy now has a higher beta than Bitcoin does. So why don't we just spin up a public company that does the exact same thing that MicroStrategy does, and we'll take a piece of this pie. Like we'll siphon off some of the demand from MicroStrategy, or maybe we'll even create more demand. Now there are two types of things that have popped up. They're the ones abroad. So there's the meta planets of the world that are trying to create new demand. There's some stuff happening in Brazil as well, and I think we're going to see more things happening in other jurisdictions. And then there's this most recent announcement by Cantor that they're raising $3 billion for what is effectively an MSTR competitor. Basically, people realize that Bitcoin is a really great asset to play this game with, and that's very bullish for Bitcoin.
Yes. Now, my understanding of the MSTR trade is that MSTR, MicroStrategy, has a real business. Like they sell, I haven't looked into it too deeply, but they sell products to end users, right? There's some
It's very, very, very tiny. Like very tiny.
There's some kind of revenue going on there. And originally, I'm accounting and finance is a weakness of mine, but like my understanding is that that legitimate old school business generates some net income that covers the interest service for Saylor's leveraged Bitcoins buying.
That was true 2 years ago.
Yeah, I'm getting there. So now what he's done is he's extended himself past that point, right? So now like he has to basically sell shares to buy more, basically sell shares to cover the interest payments for the debt that he's raised to buy Bitcoin. And so there is a scenario, like at least MicroStrategy is a real business that contributes some net income to that interest payment service. But what I'm skeptical about with these other MSTR competitors is like, why would anybody invest in an SPV or like some vehicle whose sole purpose is to raise debt to buy Bitcoin? To me, that feels a little bit worrisome and Ponzi-ish because the unwind, it's not non-recourse leverage. Like you could, those vehicles could absolutely get liquidated in a spectacular cascade. And they probably will if Bitcoin trades down 30, 40%. They'll probably accelerate it.
I mean, the bet is effectively that. Well, the reason there are two investors that we're talking about here. The first is the people that are investing in it at the deal level, and then they're the people that buy it when it hits the open market. Very obvious why people are investing in it at the deal level, and that's because they're offering it at like a 10% premium, right? So they're saying, you give us, we're going to raise $100 million and we're going to buy $100 million worth of Bitcoin, and we're going to charge you $110 million valuation to give us this money. Because the moment that it hits the public market, it's going to trade at the same premium as MicroStrategy, and it's going to 2x.
Yes.
And so you basically get your free money. And we
just described crypto VC right there.
Right. And we get to kickstart this. We get to kickstart this business, right? Because that's really what they want, right? They want to list it at a 10% premium. And then people go, what a great ARB. It's the same thing as MicroStrategy. Let's go buy this thing. And you don't even have to short the other. You could, if you were more sophisticated, short the MicroStrategy, buy this thing, try to play that premium convergence, or just buy this thing outright because you think 10% is way too low. So on the deal level, total sense why people are, I mean, this is now, as somebody on the inside, this is now like the most common thing that we're getting pitched is this type of structure, whether it's for Solana, Bitcoin, whatever jurisdiction. This is like the most common thing that's coming across our desk. And I do think it's going to work kind of the same way that GBTC worked, which is that it worked really, really, really well until it massively imploded, and then a bunch of people lost money.
It reminds me of GBTC so much. Like I'm starting to get a little worried about this. This is like, I tend to have my blinders on, think long term. Like, I think that Bitcoin is going to the moon. I don't really view many risks as being salient right now. This is a big one. Like this, when it was all covered by MSTR's real business, it sort of made sense to me. But like now that it's just turning into this kind of unfettered, debt-fueled bonanza, that I think it's totally, you're just basically like, all right, what's the price at which, the Bitcoin price at which all of these entities, these SPVs, whatever you want to call them, get liquidated? And I should probably buy puts struck at that level during peak euphoria. Because it could, that's when the market could move fast. That's when you want to own optionality.
I think there's also just a really funny dynamic here where it's easier to raise money when Bitcoin's going up, and people are more likely to respond to these convertible debt offerings and notes when Bitcoin is going up. So you can raise a lot more money at the exact wrong time.
Yeah.
Right?
Yeah.
Like the optimal thing to do is Saylor raises a ton of money when Bitcoin's up, and then he just waits, and then Bitcoin comes off, and then he buys.
Yeah.
But he doesn't do that. Either he can't or he won't do that. And so what ends up happening is he just consistently buys the tops over and over, to the point where his average price is now almost, I think his average price is $70,000 now, which is insane.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
This is the only major red flag that I can think of for Bitcoin. And it's not a problem yet, because I do think we'll get some more euphoria, and maybe this is maybe the fact that a bunch of people are trying to copy Saylor is a sign that we're getting close to peak froth, or it's like it's a sign of froth. This is the first thing that I think actually worries me and needs to be monitored. So I've got my eye on it, but I don't think, I think once people are throwing money at these things, maybe we should start analyzing the premiums of these various vehicles. Any listeners who are good at that sort of thing, maybe we should set up like a stock screener and try to understand like premium to book for each of these vehicles. Maybe when that premium starts to get towards the levels that GBTC was at back in 2021, we should say, okay, we're at peak bubble mode now, time to buy some Bitcoin puts. For now, though, I think it's just something to watch carefully. A version of this strategy that I think would be viable and that would make me giga bullish is, instead of like random companies trying to spin this up for Bitcoin and Solana and Saylor copycats, what if, like, I'm just, brainstorming with you here, Avi. What if some non-US mega corporation that wants to sell to, like, okay, so let's say that the Mar-a-Lago Accords get signed and there's like a grand new bargain, and then maybe some defense contractor like BAE Systems says, look, we want to sell weapons and kit to people outside of the new Mar-a-Lago Accords. We don't like Trump. We aren't based in the United States. We generate, approximately $3.5 billion of free cash flow every year. We're going to start, maybe we're not going to take our cash and invest it in Bitcoin, but maybe we're just going to borrow. We're going to do like a Bitcoin bond. We're going to like borrow some money, put it into Bitcoin, service the interest with our massive free cash flow, and then we'll have Bitcoin on balance sheet to transact outside of this hemisphere that's just been set up by an arbitrary dude called Trump, who we don't agree with, and we can sell our weapons to whoever we want, even if they disagree with the Donald. Like, If that sort of thing were happening, then I would be like, oh my God, this, Bitcoin's going to $500,000 a token.
Yeah.
For now,
mean,
I'm more just like
that
a
would
little
be sick.
concerned. Yeah.
That would be sick. I mean, I think the issue is that like the market attracts the losers, right? Like
don't out me, Avi. Come on.
The Bitcoin market. I mean, it's true. It attracts losers. It's like basically the like GME, right? It's like the companies that don't have
Radio
anything
Shack
going on.
Yeah,
Yeah,
exactly.
they're like, like fuck it. I guess I'll just throw a Hail Mary and hopefully this will save my business.
Yeah,
that's kind of what Saylor did. But the thing is that it is a genuine opportunity because, I don't know if I should tell this story live on air, so I'll tell sort of imagine Saylor back in 2019 as he's exploring buying this. Imagine what he might have said to somebody that was listening to his pitch. He might have said something along the lines of, this is the greatest short squeeze of all time if we can get people to FOMO in, right? I mean, that's kind of how you have to think about it, is if you know that there's a buyer of this thing that's going to keep buying this thing, why not go front run it? Why not force everybody into it? Because how could you not buy something that somebody is going to buy an infinite amount of?
Yeah.
For sure. You're front running. And then at some point, every millionaire, every billionaire in the world is going to go, I should allocate a little bit to this because people, there's a buyer with infinite capital that keeps buying this thing relative to its size. That may or may not have been something that he would think about or say to somebody that was listening to his pitch back then. But and I think that holds true today. Just on a larger scale, right? So back then, you could make a few billion, maybe you could make $1 billion doing this, and that's kind of interesting to people. But the reality is, $1 billion at a company level is not like making $1 billion doing something insane like this is not. It's okay, right? It's fine. If you make $10
billion dollars isn't cool, Avi. You know what's cool?
No, it's not.
$1 trillion. No, I'm joking. It wasn't a very good joke, though. I see your point. Look, I mean,
it was Austin Powers inspired. I enjoyed it.
it was inspired by The Social Network, and Austin Powers. I think what's going on here, like, this is the part of the podcast where I remind everybody that I used to be a professional commodities trader. This is Bitcoin is behaving. Saylor is behaving like a commodities trader. He's trying to squeeze something. Like this sort of thing happens in nickel. It happens in silver. You go and read books about how so-and-so tried to corner the market for this or that commodity. This is a classic squeezy type play. I don't think it's that different. I mean, it's harder to squeeze, like even in the world of corporate bonds, Avi, like some of these smaller issues, like when somebody gets caught short one of them, which is rare, but it happens, big institutions will short squeeze them out of it to pump their bags. It's just Wall Street behavior. And I think Saylor has identified perhaps the squeeziest commodity of our time to try and squeeze.
Yes, 100%. I mean, it's remarkable, though, I think, that it took this long. But what this is also telling you is that there's just broad acceptance of Bitcoin now, and that I think this probably accelerates. I mean, my guess would be at some point in the next 2 years, there's going to be a company, not to the level that you just described, where they, BAE Systems, but I think a reasonable company will do this because they can improve their bottom line by 10, 20%.
Yeah.
And the thing is, once it becomes really easy, and it is becoming easy today, but once it becomes really easy to borrow against Bitcoin, that's going to unlock everything, right? That's how this is really going to explode, because you don't want debt. You never want dead capital on your balance sheet. It's not good. If you have your treasury in 10% Bitcoin right now, that's locked capital in a lot of ways. That's 10% of your balance sheet you really can't do anything with unless you sell, and then it kind of defeats the whole purpose. You need to be able to borrow against it at an institutional level. Like you need to be able to go into Chase and say, hey, I want to borrow against this. And you can do that today with the Bitcoin ETF, but I can tell you as somebody that's tried to do it, they're pretty anal. And they
You
do
know
not
who I
give you,
think
they do not give you good rates,
interest rates.
or they do not give you a good LTV either.
No, I mean, in order to buy like a house using your Bitcoin as collateral, you have to basically cash out of your Bitcoin, buy the house with dollars, take out a dollar mortgage on your property that you already own, then you get a good rate. And then you take the capital that you just pulled back out and put it back into Bitcoin. Like when people ask me how do I have a lot of Bitcoin, how do I buy a house? That's my recommendation. But yeah, wouldn't it be easier to eliminate those 6 steps and just do it? You know, honestly, before BAE Systems does it, I can think of other arms dealers that would do this. Sovereigns are debt fueled entities, right? They're constantly in developing markets, they're borrowing from the IMF. In developed markets, they're borrowing from, whoever holds bunds or Euro bonds or whatever. Basically, or US treasuries. I could see a sovereign just becoming like a debt fueled arms selling Bitcoin borrower, kind of like MSTR. I expect it actually. And then maybe that gives permission for non-sovereign ensties like international oil companies to go and do the same thing if they need to transact. I was chatting with one of our buddies, Zahir, friend of the pod, Split Capital, about what it would take for an international commodity trading company to start doing tether denominated payments. And basically it's going to be end users demanding tether settlements in exchange for hydrocarbons, like commodity producing economies like Angola or Nigeria, saying, hey, rather than going through 17 correspondent banks and getting dinged by 5% along the way, like just send us tether to this wallet address. Like that's when I think stable coins may provide the lubricant for.
I mean, that's got to be happening at some level already.
Very limited. Like there was one cargo
I mean, even not state level actors, but the intermediaries, right?
Yeah,
which are it's easier for them to move. And I mean, that would be, once it reaches state level, I mean, man, I wish I could have a piece of tether equity.
But, don't we all? Still number one on the I think there was an article that just came out. Tether's the most profitable per employee business in the world. It's pretty bonkers.
But I mean, think about it. It's because what the fuck is their business other than just sitting there and like clicking a button to issue tether?
Yeah, their business is basically, we're the only company that figured out how to not get shut down by the Department of Justice.
Which is good. That's like a pretty incredible thing.
It's huge. Regulatory arbitrage is the greatest.
A large part of it is just because they started so early. I actually remember, I'm telling a lot of old stories today, but back in 2018, there's this like one of the 5 or 4 SEC commissioners, this guy named Robert Jackson, was holding it was technically off the record, but who cares now? This is so long ago. Having like a thing, and somebody asked him, he goes, so that Binance is operating a illegal offshore futures exchange. Why haven't you gone after them and shut them down? He's like, he basically said, with every action that a regulatory agency has to take, you also have to, our job is to protect the consumer. And you have to understand that when something is really big, you might end up hurting more people than helping, which I actually thought was a pretty like savvy take. That you don't hear a lot, but I do think contributed to why it took so long for any action to be taken against these companies, because the SEC did realize, hey, if we just shut them down out of nowhere, the DOJ just destroys them out of nowhere, then a lot of people are about to lose a lot of money. And that's a lot worse than, whatever's happening right now. I think that's kind of what happened with Tethers. They just got so big. People were like, we can't really shut them down. Yeah. If we shut them down, then way more people are going to get hurt than letting them operate. We just have to figure out how to get them to sort of come back into the fold, or stop doing like the really extreme stuff, like, subverting sanctions. And then if they don't do that, then they can do the other gray area stuff.
It's funny.
I am very bullish, by the way, on Plasma because of this. I wish I full of transparency, I invested a tiny little bit. I wish I'd been able to get a bigger piece.
Same.
But I do think Plasma is going to be good.
Yeah, I think Plasma is a winner. ETH is too slow. Tron is too drug dealery. There needs to be a legit fast kind of set of rails for Tether, and Plasma is the best position. But it's funny you mentioned that anecdote, Avi. It seems like that SEC, that DOJ, the sort of 2016 to 2020 regulatory bureaucracy had the consumer in mind. The Gary Gensler era was sort of just, playing whack-a-mole with crypto companies and hurting the consumer along the way because, the consumer who's invested in crypto. I don't know who they protected necessarily by suing Uniswap in Cumberland, but at any rate, that sort of action it hurt. When you hurt consumers, you just create an issue that the opposite political party can use to throw you out of office, and that's exactly what happened. Like, I view philosophically, I don't want to get too off topic here, but philosophically, I view crypto as a DDoS attack on legacy financial infrastructure. And for those who aren't aware, a DDoS attack is like when, somebody sets up bots to just like spam a website until it can't handle the inbound anymore and shuts down. If let's say that you wanted to build a Visa or MasterCard competitor with lower fees that doesn't charge merchants 2% back in like 2010, the regulatory state would block you because of lobbying and, vested interests and all of that stuff. Then crypto comes along and it's just millions of tokens showing up, trying to basically replace financial infrastructure. Most of it gets blocked, but some things like Bitcoin and Tether make it through. And even during difficult periods for crypto, like the Gensler era, crypto survived that and now has major influencers in all branches of government, executive, legislative, and, well, maybe not judicial, but possibly. I guess we'll find out soon enough. So I do think that just the nature of crypto is enough to, like, the way that it works by sort of like organically attracting bag holders, then the bag holders become influencers, and then the influencers, some of them survive, some of them get pushed to the wayside. But if something lasts long enough and pumps hard enough, those influencers become, at this point, some of the most important and powerful people in the world. I guess that's one framework through which you can look at an asset like Tether. Is Tether going to survive? Like, well, with Lutnick in Trump's ear, probably, right? Bitcoin, Donald Trump's a Bitcoiner now, so probably, right? What about Monero? That one's been pumping. That was one of those sketch coins that I think a lot of people avoided for a long time. Is Monero going to become an alternative asset for moving money in a multipolar world? Should we be paying attention to it?
This episode is brought to you by Kraken OTC, one of crypto's longest-running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
I think I mentioned Monero a while ago. I've had it on my watch list for at least 3 years now, and I own a tiny little bit, nonsense amount of this coin. And I've always, in the back of my head, I've always said I should have a much larger allocation to Monero. Like I should really own like 5-10% of my portfolio in this thing, because if you think about it, Bitcoin used to be the argument for Bitcoin in many ways used to be it's a Swiss bank in your pocket, right? You can kind of siphon off money from anywhere, chuck it into Bitcoin, and then suddenly it's yours and nobody knows about it, and it's totally impenetrable, and you can do whatever you want with it. And that's not true anymore at all in any meaningful way, because Bitcoin there's so many tools to track Bitcoin. It's so easy and so transparent. And realistically, like a huge amount of people now own Bitcoin. You own it on exchange, or you own it in your brokerage because you bought IBIT. It's a geopolitical asset now, right? It's like a gold light. It's not a Swiss bank in your pocket type shady crypto money. And the whole concept of shady crypto money, is, yeah, it's a morally gray area, but it had value, and that's why I think it attracted a lot of people. And Monero is kind of the only thing left of that era. Monero is what people thought Bitcoin was in 2016, and you kind of see that. I mean, the reason that there was that massive spike is because if you like steal a bunch of money and you want to hide it from people, you just like shove it into Monero. And I'm not saying that's a good thing. I think that's obviously a bad thing if you're doing illegal things and getting away with it by using this token. But at the same time, like, people invest in tobacco companies, and tobacco kills people. It clearly has a position in this world that is not going away anytime soon, and you can kind of see that in the volatility of it. It's very low vol for a crypto asset relative to other coins. Basically, there's zero speculators in this thing because it doesn't trade on a bunch of different exchanges. There's consistent demand over time for it, and it's actually like pretty low market cap for all things considered, given that it provides a good real service to people. It's a $5 billion market cap coin, and it's the only truly private currency that exists in this world. I mean, I don't know.
There's Zcash. There's some competitors, but
Zcash is trash. I mean, it's like complete and utter trash, and nobody uses it, and we don't even know if it has a backdoor. And there are like all these worries that during the ceremony that it was artificially inflated, and that's why it's dying off, because there's like infinite supply of this thing, and there's too much shit sort of behind. There's like just too much shit going on behind the scenes for Zcash, and Monero has clearly won the battle. And it's worth $5 billion. I mean,
feels cheap.
Like, I don't know. I think that it should at least be worth 15 to 20.
I agree.
Given its place in this world. Right?
The only thing that concerns me is that, like Zach XBT tweeted something about how the reason why this pump happened was because there was a $330 million Bitcoin heist, and somebody's gone and swapped that into Monero so that they can move it around. So I guess, like, timing is everything in trading. I agree that at some point this thing will probably be worth $20 to $30 billion, especially if global geopolitical turmoil increases, or if there's a larger war than the active ones right now. Mm-hmm. But if you're holding it and there's no heist, and that's what drives the price action, do you bleed out 50% or 70% like on short order before it then rallies? Because that would suck. Maybe we should be looking for a better entry point.
I mean, I think that's a very, very fair point. I think what you want to do, maybe you don't want to buy it right now because it went up a ton, but I mean, it's something that I'm looking for places basically.
You add on a dip basically.
If we get a dip, it's like kind of it's on my short list of now things to buy and hold for 5 years.
Basically, crypto is a like if we were to distill crypto into like a very neat flow chart, it would be gateways at the top of the funnel where you can swap fiat and crypto for each other, then centralized and decentralized exchanges, and then that's sort of at the middle of the funnel. And at the bottom of the funnel, there are kind of like pathways between both exchanges and random wallets that are not exchange wallets. So that's like the spider web of interconnectivity of crypto with some exchange nodes. And then at the top, gateways. I think like Monero is kind of like it's like basically Bitcoin plus Tornado Cash, right? It's kind of like it's like a Bitcoin store of value with a mixer built in. And that's kind of how I view it. And so I guess what ultimately matters to a criminal is whether or not they can launder that, or somebody who's just looking to hide their money. Maybe it's not all criminals, but somebody who's looking to hide their money inside of Monero. Can they get it back out into fiat easily? And if there aren't many gateways that accept Monero, which it seems like that's the case, it's still just kind of, it's a little bit harder to use for somebody who's looking to kind of privately hold Monero. Like imagine it, you're a criminal, you hold a bunch of stolen cash in Monero on a wallet. Who's going to give you fiat for that at anything near fair value? Like they'd probably demand a massive discount to take your Monero, and there aren't many exchanges that do it. Bitcoin, meanwhile, has this. It does have a mixer feature built in, which is that like, let's say that I hold Bitcoin and the government knows about it because it's all transparent and it's all on chain. I can still flee to a jurisdiction that my government doesn't patrol, move my Bitcoin there, and then extract it from a gateway in that jurisdiction without potentially getting in trouble. So it is still mobile money, even if people can see what you're doing. And centralized exchanges, because their order books aren't on chain, are in effect a form of mixer. So I do view the use case for Monero as being valid. I think that it's a nice like call option on global instability, or put option, just optionality on that. My concern is that in the absence of like total geopolitical chaos, how much value does it actually add on top of existing Bitcoin infrastructure? It's an interesting debate. Like I'm not sure where I stand on it, but we're spitballing here.
And it hasn't died. It's like one of those few assets that's been around since, when did it come out? Like 20, I mean, actually it looks like 2014. In 2014 all the way to today, it hasn't died. And it's had those two massive peaks. It had that 2018 run, and then it had the 2021 run. And now it's still sticking around.
It's it's on my watch list as well, Avi. It's a real project, and I think that we can't dismiss it, right? I mean, look, for now maybe it's just criminals and bad people, but to as the old expression goes, one man's terrorist is another man's freedom fighter. Yeah, I mean, maybe this won't happen in the United States where we live, but maybe at some point some government somewhere will start to impose capital controls on its citizens in a way that's unfair to those people. And if there's a, gateway in that country where you can get your fiat into Bitcoin and Bitcoin into Monero somewhere on the decentralized web, maybe that's a way for people to preserve value and escape. I don't know. Just even in my own family history, and probably in yours too, I can think of and my wife's as well, I can think of at least 5 examples of somebody getting told to, leave a country in the next 24 hours. Otherwise they're going to, be killed. And in that scenario, it does seem like it would be worthwhile to have a channel to get your capital out of there. Those situations in my family and my wife's family history were unfair, right? So imagine that comes up again somewhere somehow. Wouldn't it be nice?
I'm sure it comes up every few months, honestly.
Yeah. Wouldn't it be nice to get your capital out of wherever you're being expelled from in a way that's kind of liquid, rather than, I can't sell my real estate because that'll take forever. And there are no buyers for real estate owned by people like me. So, it's just, these types of scenarios are like, the history is not that ancient. So that's why I kind of pay attention to this stuff. I think it's important.
I think that's fair. So I guess we'll be allocating a little bit now.
Yeah, maybe just nibble a little bit.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. I wanted to take a moment to tell you about Arkham, the crypto exchange and analytics platform that allows traders and investors to review on-chain data. See what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham was created to simplify blockchain data, making it useful to the average crypto user. Technical and fundamental analysis are traditional stock trading skills that will be matched or eclipsed by transaction analysis, the study of wallet tracking and fund flows on public blockchains. This cycle, we have seen multiple hacks, rugs, and scam launches. The number one way that crypto traders can protect themselves is through on-chain analysis. Arkham's crypto exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations. It's the world's first exchange powered by crypto intelligence. To find out more, click the link in the show notes.
What else are you seeing in the markets, Jonah? It's been pretty calm, I will say. Not a huge amount happening over the last few days since Bitcoin hit 95. It's taken a bit of a break. I do think that we're looking at 100K in short order. At which point I'll be offloading the rest of those calls.
Good call on that. Market move
that was market move. I mean, with calls, it's always about timing, and market moved 12% in 4 days, which meant that was a pretty damn good return on those 120K calls that I was talking about last week. But I mean, now we're pretty close to it, and I do think that we can stall around these levels. Like, we can stall over the next 10%. I mean, I do think that we can hit 100, 105. I don't necessarily think we're going to 120 in a straight line. So I do think now is a good time to start chipping away at those calls. I mean, still obviously holding my core position because I'm very bullish, but the extra leverage comes off now.
This is the kind of market where you want to be long spot and short. Like, let's say you're long 100 units of spot. Maybe you want to be short 30 units worth of 105 calls. Collect some theta, especially if you don't expect it to just like blast to 120. I don't think you want to be long calls anymore. I don't expect the market to rip quickly here. I think there's too much uncertainty.
I'm just waiting for the next headline. It's been such a headline driven market. I think that's a little bit of what the market's doing right now. Also, is it's digesting. I think it's going to digest for a little bit until Trump comes out and says the next absolutely insane thing.
It's going to be crazy.
So we kind of have to just wait around until then.
He could say something crazy bullish. I think it's more likely that he says something chaotic and vomit inducing. And then, but I do think there's a put under this market. If it goes too low, look out for the stimmy. It's coming. These guys aren't going to tank the markets. They can't. They won't. That's not their mandate. Especially with Bernie and AOC touring the country, doing their Fight Oligarchy tour. Like, if those are the politicians who start to take over, then you can sell everything. But the incumbents are kind of like, they don't want to just hand it to those people.
I mean, but look, we're from the absolute bottom to here, it's up 17%.
It's a big move.
It's a pretty big move. I mean, if we go back to the lows, it's 14%, another 14% drop, which is not
not crazy.
I think you kind of need that in order Trump to walk back again. Like you're going to need that.
He's
that
not going to
type of
flinch on a
confidence.
5%
Like,
pullback.
Yeah, that's what I'm trying to articulate, is that it's gonna take a little bit. And he does now have wiggle room to be more aggressive. I mean, we still have we have no freaking clue. Earnings season's coming up. You know, there's going to be a lot of earnings coming out, and it's not really going to tell us a lot. But maybe, I mean, it's really not going to tell us anything. But it does make you wonder. I mean, how much are companies going to be impacted by these tariffs? Like,
they're probably not impacted yet.
No. Well, yeah,
they're going to be crying. Basically, CEOs are going to come out on these calls, and every single one of them is going to start
guidance.
They're all going to start crying. They're going to be lowering forward guidance. They're going to be crying about how bad these things are. They're going to talk about how many of their customers, small and medium-sized business customers, are going to go bankrupt if these tariffs take hold. They're going to talk about how, you know, consumer uncertainty is impacting purchasing. They're going to talk about logistical challenges. So basically, it's just going to be like the lobby season is the new earnings season. These guys are just going to be lobbying via these earnings calls, begging for Trump to make their lives easier and send us back to Valhalla in the stock market. I don't know. I've never been an equities trader. I just buy the index and stick it in the bottom drawer. I think that this is going to be like wine season, WHINE season. And I think that that's probably priced in with the stock market trading, you know, whatever it is, 55.70 instead of 6,100 or wherever it should be, absent these tariff things. Should we talk about Pendle? You've been bringing that one up a lot, and I did a little bit of research to try and get smart on it, like you are. Maybe, you know.
Yeah, why don't you go ahead? What have you learned? I mean, the reason I was looking into it is just specifically because I'm super bullish RWAs and anything that tokenizes assets, because I think regulation is going to make it super easy. But I haven't done a deep dive in a while. What did you find?
I did a little bit of work on it because you've been bringing it up on pretty much every single one of these podcasts, and I knew almost nothing about it. So I decided to try and just educate myself. Basically, well, first of all, it's a real business. So my first box of like ignore or pay attention is checked. I'm paying attention. The PE is like 22, right? I mean, if you go on DeFi Llama and look at their revenues, they earn basically $1 million a week, and they trade, you know, just shy of $1 billion FTV. So it's trading, you know, it's a big growth asset too. Like that revenue is going up. So this is a real business, trading at a low PE. Turns out they do effectively dividend all of their fee income back to token holders via that VE Pendle mechanism. So if you stake Pendle, then you get VE Pendle, and then you just sit there and collect fees that they earn from, you know, people trading on their platform. So that box is checked too. It's kind of like Hyperliquid. It's a real business trading at a decent multiple, not a crazy one. And the tokenomics are all kind of square. What's weird about it is basically you deposit yield-bearing assets like staked ETH or, you know, some yield-bearing stablecoin, and they basically break it up into the principal asset and the yield-bearing asset. To me, that's weird, because if you trade a corporate bond or treasury bond, those two things are linked. If you want to get long yields, you don't go and buy U.S. Treasury yield coin. You short the bond, or you buy an ETF that's short bonds, and vice versa. If you want to bet that the yields are going down, you buy bonds, or you buy an ETF that buys bonds. So separating yield from price is like kind of strange and unintuitive to me, but this is like the growth of this project is unignorable. The tokenomics are unignorable. The valuation is so cheap that it's unignorable. And if the growth continues, I think you're looking at, you know, a 2 to a 10 bagger on this one. So I'm with you.
I think if I remember just from the outside. I do agree that it's a little unintuitive to split it up, but Pendle kind of came into being when yields in crypto were ridiculously volatile and people just really wanted to speculate on them. Yeah. I mean, yields would go from like 30% to 100% to 50%, and they just be all over the place. And some people just wanted to lock in a constant yield. And, you know, like if it's at 25% and somebody's willing to bet that it's going to go to 100, why not lock in your 25 and just not worry about it? I think is the idea. But now, I mean, really, it's just like a stablecoin accumulation platform as well. And it's,
you know what else I loved about it to that point, Avi? It's connected to 11 chains and you have your DeFi dashboard right in front of you. Like I messed around with, I did my fair share of yield farming for a while, and I was blown away by how much value, like I had an Apple Note file that I would keep to like try and keep track of where all my money was. Cause it's very difficult. Like you can just forget about stuff and lose thousands of dollars on chain and protocols that you forgot you like staked or locked or you know, you can just lose money. The idea of having like a one-stop shop with a dashboard that shows you all of your different yields and connects to all of your different chains, and you're not going to have like some stranded asset from 2022 sitting on like a DEX on Near, you know, like you're going to have it all in one place. I think that is a good product that the market, it kind of lacks. And so if this happens to be the one that people gravitate towards, that alone is a use case that I think will drive memetic momentum in the price action, absent everything else.
Yeah, I mean, one of my goals for this quarter is just to dive into everything that actually makes money and is growing. Just because I've been so disillusioned with the state of the industry, and Pendle was one of them. I'm doing my deep dive now on Maple. Maple TVL has just, I mean, it literally 4x'd since February, and I'm trying to get a good handle on, you know, what those fees are going to look like, and especially relative to the market cap and what directions it can continue to grow into. But RWAs are coming, man. Don't sleep on this. Next big trade, that and maybe some AI tokens. But I mean, this is going to be like a year-long 5 to 10x type trade, in my personal opinion. Maybe we need to go talk to some RWA experts for the next pod.
Yeah, I think RWAs are real AF. It's all kind of coming together, isn't it? It's like stable coins are proliferating. The rails are there. The L1 infrastructure can handle billions of transactions seamlessly now. The gateways are popping up. It feels like only a matter, like a kind of a when, not if. All of these things kind of just click, and we're you know, we swap out existing TradFi plumbing for crypto plumbing at some point soon. It feels like we're nearing an inflection point there.
I think you're right. That's a very optimistic note to end on, Jonah.
Yes, it is.
The years of TradFi are coming to an end. It's almost time for crypto prime time.
Crypto prime time.
All right, dude.
Great talking to you, man.
This is a pleasure. Yeah, as always. This is fun. We'll catch up soon.
Thanks, Avi.